Somewhere between a war reshaping West Asia and the changing nature of trade relationship with the United States, two countries, Canada and India, are quietly inching towards each other. Today, we are going to talk about what that means on the ground. I'm Maha Siddiqui, Director of Policy and Strategy in Canada at the US-India Strategic Partnership Forum. Welcome to this joint webinar with the Alberta-India Chamber of Commerce. We are going to discuss today not abstract policy. What we're going to discuss today is how food reaches your plate. Simply put, fertilizers feed crops. Crops feed people. Right now, the global system that moves fertilizer from where it's made to where it's needed is under serious strain. The war in Iran has sent shockwaves through the supply chain that were already fragile. India, which consumes close to 60 million tons of fertilizer every year, making it the second largest consumer in the world, can no longer afford to depend on a handful of suppliers. It needs alternatives, fast and, more importantly, reliable. Canada, meanwhile, is doing its own reckoning vis-a-vis the United States. Canada is actively looking for new partners and new markets. The search for Canada, too, is urgent. Clearly, both countries are being pushed towards diversification at the same time. It may have emerged out of necessity, but it can be an opportunity in disguise. But actioning opportunities into reality requires a mindset shift. Right now, Canada and India largely operate as buyer and seller. Canada exports potash, a key fertilizer ingredient. India buys it. That's transactional. What we're asking today is whether the two can go beyond the buyer-seller relationship to a genuine equity-based partnership. Is there economic evidence that this might work to create a sustainable long-term relationship? What policies have moved the needle? Which ones have stalled? And can Canada and India genuinely become natural partners? Those are the questions that we are putting on the table today. To help us work through them, I'm honored to welcome the Consul General of India in Vancouver, Masakui Rungsong, who will be our opening speaker with some grounding remarks there. He'll be followed by Rohit Singh, Chair, Global Value Chains Committee and Advisor to the Board of Directors at USISPF. He was the former Secretary to the Government of India. Professor Swapnika Rachapalli, Assistant Professor, Strategy and Business Economics Division, UBC Sauder School of Business. Jeet Jithe, Chief Operating Officer, Clean Seed, and Matthew Dawn Trapp, Director of Government Relations, Fertilizer Canada. We'll close with a question and answer session, and final remarks will be made by the Alberta-India Chamber of Commerce President, Anupam Srivastav. By the end of this session, we want you walking away with a clearer picture of what Canada and India's strategic partnership in this specific space of fertilizer could look like, and whether this can be a blueprint for sustainable resource diplomacy. Counsel General, with that, I'm handing it over to you.
Thank you, Maha, for organizing this webinar. I think this has come at a very right time, as you rightly mentioned in your opening address, that given the geopolitical situation, I think it is more important for us to intensify this relationship between India and Canada. It is also important for us to note that the India and Canada has been engaging in this economic relationship, as you rightly mentioned, that it's been transactional, and would like to look for more strategic, which is more sustainable and long-term, that secures the food security of India, as also Canada becoming the continuous support and supply of fertilizer to the need and to meet the requirement of what we have in India. And that there are two things, as you rightly mentioned, because of what is happening in the Gulf region. I think there is even more important and need for us to discuss this area where there is a dire need for India to diversify the source of fertilizer to meet the requirement of our farmers in India. And this has come at a very right time, this discussion, and it's very important for us. You also rightly mentioned, and it is there that Canada, especially Saskatchewan, has been a source of fertilizer for us, potash especially. And this has served the interest of both the countries. Uh, Canada as a source of fertilizer, which served the need for their export, and for us to have this as an input for our agriculture sector. But as you rightly mentioned, that this has been transactional, that they produce and we lift it and uh, use it for our thing. But it's important for us to go beyond that and establish a relationship where there is a continuous supply chain that is certain, assured, and long term. In this context, I think it is important for us to have this discussion. There are many experts and seniors who are very familiar with this sector and the strategic importance of this sector in the relationship of these two countries. Let us also remind ourselves of the SIPA, which is the Comprehensive Economic Partnership agreement that is under discussion. And I'm sure that the stakeholders, both in India as well as in Canada, would be including this as an input to be a part of that SIPA, which is a larger umbrella uh, to bring all the sectors and stakeholders together so that Canada and India's relationship, especially economic relationship, becomes sustainable and it's more comprehensive, long term, certain, and more assuring to each other in the coming years. I will not go into the details because there are more experts, but I'm very happy that Maha, you have organized this and picking up this important subject, an important sector and area in our relationship. And I'm sure as subsequent speakers unfold the areas where we need to cooperate more, we'll see that we'll have a take home, as you rightly mentioned, that at the end of this webinar, there'll be something that we can take it forward and also fit to the policymakers. I'm happy that this webinar is taking place. Thank you so much. I'll end here.
Thank you very much, Counsel General. Let me now go across to Rohit Singh, who will talk about supply chain security and how investment and equity can perhaps create longer-term partnerships.
Thank you. Thank you, USISPF and Alberta-India Chamber of Commerce for inviting me here. Thank you, Excellency, for being present here. Distinguished panelists, first of all, I think we need to change the way we look at potash. It's not just a traded commodity. We should be looking at it more. Of course, for Canada, it's a strategic natural resource. And for India, it's a huge food security issue. And we have to feed 1.4 billion people. And fertilizer, we are probably the second largest user of fertilizer in the world. And for us, it's very important. It's a for specifically, if you look at potash, we are the third largest international potash market, and we use it for wheat, rice, pulses, fruits, and vegetables. Uh, I've been Secretary Consumer Affairs. I dealt with pulses directly in my job 2 years back. And we had to deal with a similar situation with Canada on pulses. Because India, the pulses production can really be affected due to the vagaries of monsoon. It's hugely dependent on that. And then we had to very actively look at the Canadian and the Australian market, mostly the Canadian market. And I'm very happy to say here that because of Canada's support, we were able to sail through, I think, 2023-24, which was a tough situation here at home. India and Canada have long been friends, except give or take a few adjustments, but that apart, we I think we should be looking this more in terms of partnership. Maha talked about supply chain issues. Conventionally, when we study at universities and we at business schools, we look at supply chains from the point of view of efficiency, scale, cost effectiveness, least distance. Those are the variables that are taught in schools. And Professor Rashapalli would, of course, know more than I do. But given the current context and given what has happened between Russia and Ukraine and many other points in the world, now supply chains has to be looked more in terms of resilience, and it's not just cost. So we have to look at resilience, and it's very important to look at this way. And it's not just the economics, it's not just the most cost effective thing that is there. Um, in terms of India Canada trade, as the previous speakers, both of them said, we should look beyond transactional. We looked at the same when it came to pulses. We say, no, we must look beyond annual contracts, and we have to have a perspective in terms of long-term supplier agreements. Uh, Maybe look at equity participation in upstream Canadian assets. Why not? That is important because that puts our skin in the game, and that gives a comfort level to Mr. Matthew Don Trapp and his associates that there is a market here which is which is willing to look at long term in terms of a procurement partner. It's not just that. I think logistics play a very important role. So we have to do joint logistics planning. I mean, we must look at planning the logistics jointly, both from the ports on the Canadian side and the receiving ports on the Indian side. Our ports are not the most efficient in the world. Things are improving. Regulatory regime is being brought down. There's a lot of talk about ease of doing business. There's a bill in the parliament called Jan Vishwas 2.0, which is looking at reducing unnecessary compliance burden on the entities, especially when it comes to import and export. So that is happening. So we must take advantage of that. And one more thing is we must also look at strategic reserves and buffer when it comes to potash, because for us, Indian agriculture, it's very, very important. And just like what is happening in terms of fossil fuels, while China has huge strategic reserves, India does not have it to that extent. And we are feeling the vulnerability at this point in time. So if the war continues beyond a time, we will feel the pinch. So I think at this point, we must start thinking, both countries looking at strategic reserves slash buffer. Bilateral investment was alluded by the previous speakers, and we must look at how, as a next step, bilateral investment has to be promoted. Excellency mentioned about the agreement which is being discussed and which should be signed hopefully next year or in near future. Last but not the least, actually two more points I have. One is, which I have seen in commodities, because I handle commodities for Government of India for 2-3 years, is both the buyer and the seller is looking at policy predictability at both the points. So if we keep changing our tax regime, the import duties, or the selling side keeps changing the parameters of export, then it becomes difficult to talk in the long term. So policy predictability is very important. Of course, it's intertwined with when we talk long term and not annual contracts. But I think it's very important for both the countries. And this will probably come as part of the agreement that we need a stable policy regime. We need a predictable policy regime for X number of years. And finally, last but not the least, is the issue of technology and sustainability. Everybody is talking green, and both sides must look at how we can push, how we can catalyze more sustainability into the entire potash trading ecosystem. So thank you very much again for providing this opportunity. And in case required, in terms of a question, I will intervene later as well. Thank you, Maha, for giving me this opportunity.
Thank you very much, Rohit Singh. And I think that gives a perfect segue for Swapnika to come in with regards to supply chain. And as Rohit Kumar Singh pointed out, it's not just cost now, resilience also matters.
Thank you, Maha, for including me in the panel. I'm really excited to learn a lot from all the experts here. I'm an economist, so I'm not going to bring in anything, weird, or I'm not going to give you new insights into this problem, right? I'm going to state the very obvious things that economists have been studying for a while. And as Rohit Kumar Singh correctly mentioned, a lot of the focus of economists has been in terms of, thinking of efficiency gains from trading with each other. But you'll be happy to hear, sir, that actually there's been a renewed interest in understanding resilience now, especially because of, say, COVID shocks, because of wars, how supply chain interruptions have been very, very damaging for businesses all around the world. So economists are very interested in thinking about how do we improve resilience, what does uncertainty mean for businesses, and how can we grow through this uncertainty. As I said, I'm not going to what I will tell you today is going to be stating most obvious things, but I thought my role here would be to bring to highlight basically how economists think about these problems, and hoping to hear from the industry members here how they react, and if what I'm saying makes sense in this context. So I want to talk about what we know about supply chain shocks. What happens when we're met with sudden supply chain shocks? What happens to the buyer side? And it's been very well studied in economics using really detailed data, looking at transaction level data. Say for India, we have some amazing data available, and we've looked at what happened during COVID. When I say we, it's not me. I'm talking about the broader economic literature here. People have also looked at this question using, say, customs data for the US and other countries. So what do we know? When there are sudden, unexpected shocks to the system, a lot of relationships break, right? Say during COVID, there's a lockdown in a supplier region, and the supplier is not able to meet everyone's demand. What is the supplier going to do? Who are they going to prioritize in their business transactions? We know that there's going to be some priorities given to certain types of relationships. Maybe they're related party transactions. I know I'm related to this other firm, so I have to send goods for this firm. That's important. I do that. Outside of related party transactions, that's where it really matters. When we don't have any kind of promises, we don't have any good contracts written down. What happens is, we've noticed the type of relationships that end up surviving are relationships that have been established over long periods of time with a lot of trust, and where trust has grown over time and quality has been grown over time, right? We have certainty in this relationship. The buyers know what the value of this relationship is, and that suppliers know how important this relationship is for them. So those are the ways people have moved around these shocks, right? When there is uncertainty, especially when there's expected uncertainty. Whereas I know there's uncertainty in this transaction. I know policy uncertainty is common between these two countries or between these two regions. Then I'm going to start developing all these informal institutions to deal with such shocks, right? But the best outcome for us is to have some form of certainty. And I think talking about joint ventureships is kind of the way to go. Either I'm related to you, which means, we are the same party, we're the same firm, so we better act that is best for each other. Or we develop a form of trust, which is not fully foolproof, right? It's not perfect. It's not a perfect solution, but at least it'll help me. But something I want to bring to point in this type of evidence is that these relational contracts, we call them relationship contracts, contracts that develop over time through the build of trust, they work really well when parties are trading some complex goods, right? Which means I want some specific input that requires a specific type of investment that has to be made that no one else can provide. That's when trust really matters, right? If I want to invest in something that's important for you, you better make sure that you give me business consistently, that there's no uncertainty in here. So I'm not an expert on potash, but I want to ask, is potash a product like that? Is it a complex product that requires these types of investments where trust is important, or is it a standardized product? If it's a standardized product, these types of relationships might not actually be helpful, right? Long-term relationships that you develop over trust might actually not help a lot compared to other complex products. So this is where, again, joint ventureships might actually be more useful. Another point I kind of want to make is what happens when there is uncertainty. You end up seeing lower investments, as Councillor General has already pointed out and Rohit Kumar Singh has pointed out. That is the most important kind of bad outcome of uncertainty, policy uncertainty, negative shocks to supply chains. You just don't trust the transactions anymore. You don't want to overinvest in quality or overinvest in your partnership. So you're going to end up having lower kind of quantity or quality of the product. You cannot have a good free flow of transactions and certainty in the market. So I think underinvestment, I think, is kind of the major problem that we face when there is uncertainty amongst trading partners. And cost of not having that certainty, cost of not having, say, a relationship that governs your transactions, or a joint ventureship or a related party trade that governs your transactions, is this underinvestment. And other costs, right? It's not just about I'm not getting my product in time, or I get my product at a high price. When I don't get my product, I have to figure out how to find the product in the large amount of market that exists. That is not cheap. The search cost of finding new relationships is not cheap. So say Canada faces a shock and it cannot provide potash to India, and this potash is a very important ingredient. It's time dependent. How am I going to find another supplier when there is this uncertainty that I face? And that is very expensive. So the search costs, increased prices, obviously, lower quantity and lower quality, but the search costs and underinvestment, I think, are kind of the really important parts to this. So I want to kind of end on what do I think are the benefits of a related party investment, right? Where we are investing towards both parties' benefits. I think this uncertainty angle that removes the frictions I face for investing in future relationship, in benefiting both of us, in growing our business that's better for both of us. That is very key, and also that reduces dependency on market forces, right? I am just I don't want to be at the whims and fancies of nature, of random shocks that hit me. I want to have something that will help me through these shocks. So I'm going to end there. So as I said, I'm not saying anything new here, but I think we just want to bring these points to picture here and ask how the industry actually deals with these shocks. What I have presented is what we see in aggregate data. We look at a lot of data and we see this is how firms are coping on average. And I would love to hear from the others on this panel. Thank you.
Thank you, Sapnika. And that really takes us to Jeet now. Since you mentioned industry, he's the perfect person to bring in examples from the industry where policy has worked, which policies have not worked. Jeet.
Good morning, everyone, and good evening as well, I guess. Congratulations to Maha for organizing this event. And thank you for having me here. From my perspective, I'm going to talk about, we won't go into details a lot, but we'll cover a lot of items that makes us a unique partner. Both Canada and India, if you look at them from an outside perspective, it looks like naturally they're complementing each other, right? They're great partners. Canada brings technology, sustainability, resources. India brings scale, demand, and long-term potential growth. The opportunity is significant. The real challenge becomes when we move from policy intent to actually getting something done on the ground. And now Clean Seed has been in India since 2023, and started with looking at the Punjab region, Haryana region, and the other regions, understanding their problems, understanding what is needed for farmers to evolve, and kind of taking our technology from Canada and scaling it down and taking them to the farmers. So innovations that are done in Canada can benefit Indian farmers as well. And this is where we talk about potash and other fertilizers, and our machines are able to actually provide more bang for the buck for each gram or each kilogram of the fertilizer that's used. When we look at Canada, Canada has a very stable and predictable regulatory environment. There's a strong emphasis on innovation, sustainability, ESG standards, which create a globally competitive technology and resource sector, as we have seen in case of agriculture implements, as well as potash and other resources. At the same time, the system is highly structured, and commercialization can sometimes move much slower than anticipated due to compliances, process layers, and other items that can come. Overall, Canada provides strong foundation for long-term partnership and high-quality innovation. When we look at India, on the other hand side, India has a very strong strategic intent around food security, agriculture productivity, and modernization. The government has a clear focus on strengthening supply chain and are open to global collaborations. Now, I have seen it firsthand when we went to India, when we took the technology, the help we got from both the Canadian side of consulates and Indian consulates, and it was tremendous. I have seen them work on ground with us to bring the technology to masses. But when it came to the point where we needed to execute, there are certain things that came up. For example, the agriculture in India is a state subject, while everything else is done at the central level position. So, for example, if the government of Punjab wants to subsidize a farm implement, the implement often requires approvals from the central government. Also, much of the funding comes from the central government. So execution depends on coordination between both central approvals, funding allocation, and state level rollout and adoption, right? In practice, this creates a lot of differences in timelines, approvals, and adoption is unique for every region that we go to. From our experiences, success in India is not about a national strategy. It requires more state level engagement, localized partnerships, and understanding the regional priorities, right? For example, when we look at Punjab and Haryana, the farmers are looking to increase their income and be more sustainable, while the government is looking at, okay, how do we make sure there's no stubble burning, right? So understanding those key things and bringing a solution that works for all is one of the keys. When we talk about today's trade, it's not same anymore. I think people have thought about this a couple of years ago, and then now everyone is looking for a more symbiotic relationship rather than just a traditional buying and selling relationship, right? Everyone wants to be part of this big movement or part of the trade, and kind of they want to input their time, their money, and then they want to actually reap the benefits as a whole group, not individuals anymore. The one thing that is unique in this situation, Saskatchewan and agriculture and the implements that are made here versus India agriculture and the number of quantum of farmers there, it fits perfectly. As long as you can take the Canadian technology and work with a local partner, like for example, we have Mahindra as our partner. And they looked at the technology, and both of the companies, Clean Seed and Mahindra, worked together to create something that would work for local farmers. Also, that would work for other farmers in the similar situation for the country, for example, Mexico, Brazil, Argentina, Africa. So this is a joint kind of a push between two companies, two countries, and they created something that works for everyone, even though the patents and everything else was Canadian. But giving them a shape that works for the local farmers were done by Mahindra and their team, right? So if you look at the opportunities that are still there in policy, is mostly aligning the central policy to the state level policy. Even after that, there are so many gaps that are left, right? And to fill those gaps, you need some sort of a risk-sharing framework where the risk is shared between the government as well as the private sector. At this time, it all sits with the private sector, right? The overall alignment of the coordination between the central and the state system is also critical. As we all talk about relationships and making sure everything works well, I think the critical thing is actually happening in the real life now. The mindset is shifting, and people are going to symbiotic, collaborative, and long-term partnerships. Instead of simply buying and selling, the focus is now on shared investment, shared growth, and shared supply security. Agriculture and fertilizer are those sectors where we can't be unpredictable, right? Long-term sustainability benefits both the countries. It's not just Canada, it's not just India, it's farmers, it's the future, it's the food, and that's why it's critical. To conclude, I believe that India and Canada are much, much, much greater partners than just the trade volume numbers can tell us. The real opportunity lies in building long-term partnerships where policy, capital, and execution works together across the borders. Future is not just about trading more, it's about building together. With that, I would conclude my side. Thank you once again.
Thank you very much, Jeet. And finally, Matthew, it's over to you to take us through what the industry, the fertilizer industry, really believes at this juncture in Canada.
Yeah, thank you for the opportunity to speak today. So I represent Fertilizer Canada. We're the national association representing the entire fertilizer supply chain. So producers, manufacturers, wholesalers, importers, and retailers here in Canada. When people think about fertilizer in Canada, they're often thinking about potash, and for good reason. So Canada has the world's largest and highest quality potash reserves. Our members, including Nutrien, Mosaic, K+S Potash, who are investing heavily in expanding local Canadian production. Nutrien operates 6 potash mines in Saskatchewan. Mosaic operates 3, and together they internationally market their product through Canpotex, who is one of the largest exporters in the world to India from Canada. K+S continues to ramp up production at its Bethune operation and is looking to significantly expand production. And then BHP is developing a new greenfield Jansen mine near Saskatoon, which will be one of the largest new potash developments in the world. So that growth matters because global demand for essential crop nutrients like potash is continuing to rise. India is already the 4th largest market for Canadian potash exports. And we see tremendous long-term opportunity to deepen that relationship further. What's encouraging is that relationship is not just transactional. So Canada and India share strong democratic values. We have very deep people-to-people ties and increasingly strong business and improving government relationships. So very few countries in the world are blessed with major potash reserves. In reality, Canada competes against only a small number of international global suppliers, most notably Russia and Belarus. So from Canada's perspective, we want to be that trusted global supplier of potash. We don't want to see the world increasingly dependent on authoritarian regimes when Canada is able to offer a stable, reliable, and high-quality product. And as some of my fellow panelists here have touched on, the world's moving away from that purely transactional trade relationship. Countries are increasingly focused on supply chain security, resiliency, and reliability. So the war in Ukraine, disruptions in the Middle East, and volatility in global shipping we've seen with the recent Iran conflict have shown how vulnerable critical supply chains can become. So countries want to partner with partners they can count on. And Canada wants to be that long-term provider for India for potash. But beyond simply exporting potash, I think there's a tremendous opportunity to share Canada's expertise in nutrient stewardship and agronomy. So one of the biggest opportunities for collaboration between our two countries is around a more balanced use of fertilizer and nutrient management. So today, India consumes approximately 4 million metric tons of potash annually. However, based on economic estimates, optimal application rates would suggest significantly higher demand of 10 to 12 million tons per year. So the government of India itself has recognized that the ideal nitrogen, phosphate, potash, NPK ratio should be approximately 4, 2, and 1. In reality, current use patterns are closer to 11, 2, and 1, largely because nitrogen fertilizers receive significantly higher, government subsidies. The consequence is that farmers are often incentivized towards over-application of nitrogen at the expense of other critical nutrients like potash. So over time, that imbalance can hurt soil health, reduce nutrient efficiency, and ultimately limit crop yields. And for a country like India with a growing population, that's incredibly important. So the opportunity here is pretty enormous. So research has shown that if Indian farmers move towards more balanced fertilization practices, you could see wheat yields increase by 80 to 90%, rice yields potentially 60%. So that'd be transformational, not just for farmers, but for food security for the country and for the region more broadly. We're very deeply encouraged at Fertilizer Canada to see discussions like this taking place amongst policymakers in both Canada and India. The recent engagement between our NRCan Minister Hodgson and India's Minister of Fertilizers focused on nutrient management and soil fertility and was a major step forward. And even the discussions between Prime Minister Carney and Prime Minister Modi had a heavy focus on agriculture cooperation. So all in all, it's a pretty significant opportunity for both countries. And we as the Canadian fertilizer industry are very eager to help supply India with the fertilizers it farmers needs. So very happy to be here and happy to take any questions.
Thank you very much to all our speakers. And we have some questions now. So we'll go to the questions and then finally we will go to Anupam for the closing remarks. So there's one question that has come up immediately, but we had asked for questions prior to this webinar. So let me take those questions first. Any of the speakers who would want to speak on this can just go ahead. The question is about decarbonization efforts in the potash industry and what role does it currently play? Please go ahead, Matthew.
I would say, first of all, Canada's already a world leader on sustainable production of fertilizer. So our potash is actually, we had a industry study that took place showing that our potash is produced with 50% less carbon emissions than global competitors in places like Russia and Belarus. It's very clear we don't have the same environmental standards, as some of these other nations. We have a much higher threshold, for labor rights, for human rights, and also environment. So potash is already, quite sustainable in terms of Canada. There is, more that can be done, and our members are investing heavily on ways that they can make their operations more efficient. A lot of those challenges to take the next step is ultimately outside of the fence line. So we're very interested in how, grid decarbonization goes in terms of electricity. Potash is very electricity intensive. So seeing that, things like small modular nuclear reactors, as those get rolled out across the country in terms of nuclear, are very interested to us. But overall, I would say, we're already incredibly sustainable compared to our global competitors.
Thank you very much, Matthew. Let me take the next question. This again is this is on the India side. One of the persons who's attending the webinar would like to know whether cooperatives like IFCO can be approached by a player who wants to import a fertilizer. Is that the right way to go about it?
The player who wants to import or export?
Import.
Oh, from within India?
From Canada to India is what I believe the person wants to ask. If they want to import from Canada to India, if they want to be the importer of the fertilizer, what is the right way of going about it?
Yeah, they can certainly approach IFCO. Yes.
And is there any other regulation or something in specific that they have to look at?
Yes. So in terms of imports, it is controlled by the government. So we have to look at the regulations of the Ministry of Fertilizers as to how the import process can be facilitated. It's all available on their public in the public domain, like the websites or whatever documents they have. Yeah. But you have to go through the ministry because the import is regulated.
Right. Thank you very much. The next question is slightly long, and I'll read that entire question out. What kinds of support are smaller organizations in this area of business of potash looking for, especially in market growth and supply chain? In particular, I'm interested in organizations that struggle to access government support programs. I think this is more relevant to Canada because the person lives in Edmonton.
Yeah, I would say it's best to, reach out to the producers themselves. Fertilizer Canada, like we're able to support. It's tough to speak to this one specifically without understanding the details, but I'll post my email in the chat here. And if you'd like to reach out to me specifically, I can maybe help direct it to where it needs to go. There's so many different government support programs that exist within other departments. So not sure if this is like a transportation issue, an Enercan issue, an ag issue, but I'll post my chat here my email, and if you send me more details, I can happily help direct that.
Right. Thank you. Thank you for sharing your email as well. Counsel General, there was one point that was raised by Jeet about a risk-sharing framework. Would you be able to give us some insight into whether these frameworks possibly can be included when an agreement like the CEPA is being negotiated?
Yeah, Sid, we met last time, I think, when I visited Regina, and we had a very good discussion. And even Secretary Rohit sir also mentioned about it. It's about long-term predictability, which is also reflecting in this risk that Jet is talking about. I think if we have a long-term relationship currently with just transactional, which we're just lifting what is produced here, and we're talking about Rohit sir talk about the equity that is investing in upstream, which I'm sure our industry people should be looking at, so that there's much more trust that Swanika is talking about. I think these are all interrelated. And to reduce this risk, it's important for the industry people or the investors to come together, especially, long-term, which I mentioned about the CEPA. I'm sure the stakeholders both in Canada as well as in India would be talking about. Governments have been circulating to the provinces and the stakeholders what input and what are the important items to be included in the CEPA, especially in the agri and fertilizer sector, so that I think the risk can be mitigated. Rohit sir talked about the alignment of the regulatory framework, which I think is fragmented and disjointed. I think this will be resolved under CEPA. That's what I expect. And sir, we are pushing very hard so that this negotiation be concluded by the end of this year. It's a bit ambitious, but I'm sure this will happen. And we're all looking forward to that. Just one point to mention about in terms of the complementarity of our relationship and the foundational relationship that we have between India and Canada during that very brief period of disruption in our relationship. We're talking about those 2 or 3 years. But if you look at the economic relationship, the trade figures and the investment figures, it does not just remain constant, but it goes up during that time. So that's the complementarity of our economies that we are talking about. Trade figures were around I'm talking of commodity, not excluding the services, the 11 to 12 billion that did not just remain constant, but it goes up. If we talk about investment, the pension funds that came to India, that also went up from some 75 billion to 95 billion. That was during that time. And in my interaction, I came in 2024 with the business people. They're all bullish about Indian market. So I think the business people are looking about the size of our market that which India provides and the resources they have but what we need is to regulate it to align in our regulatory frameworks, which all the panelists have talked about. I think that's important. So when it comes to risk mitigation, not just in the fertilizer, but also all commodities, I think it's about building trust and not just about lifting the commodities, but also, to have a long-term certainty, predictability, that much interaction in terms of forming partnership and investment and equity. I think these are all important things.
Thank you very much, sir. I'll take the last question and I would request both Swapnika and Jeet to address this. This term diversification is being used so often right now because of the geopolitical flux that we are seeing. I want to understand, Swapnika, from you academically, like you can't diversify overnight, right? It takes time. Are there any timelines that are being studied? And Jeet, to you, practically, what have you seen on the ground when companies want to diversify? What are the hurdles, and how much time does it really take from the idea to the execution? Swap.
I'm thinking what evidence I've looked through. So, okay, when it comes to diversification, it's not a new concept, right? We do this in stock markets all the time, and all our investments are diversified. And why do we do that? It's because there's risk. Unlike in stock markets or our investments, we could literally do that overnight, but it really takes time for firms to do that. So the one study I know was in India, which looked at transaction level data. And the kind of insights we've gotten from that paper is that when there are these COVID shocks, you lose relationships. You tend to break them because they can't satisfy the nature of the relationship, the point of having that relationship. The ones that break the most relationships are the firms that have a lot of them to break it, right? Like you are a firm that has diversified your options so much that when you're hit with shocks, you have the opportunity to just move from one person to the other that's willing to satisfy your needs. On the other side, so once the shock ends, what do we see actually end up happening? Like, what do these firms who have been hit with these negative shocks, what do they end up doing? They end up start to form new relationships. So that has been studied. So maybe it's a matter of a few months, 3 to 6 months. We do see in the data that they start trading with new partners that somehow they've figured out who to buy from. And it turns out that they've learned from this negative experience that they start to buy from partners that are going to be more resilient partners in some sense. So you look at characteristics of these sellers and you see these are bigger sellers, they're high quality sellers, they're more central players in these supply chain relationships. So that much I know. More broadly, I don't. So we have learned theory in this, right? Forming relationships take time, and part of what forming relationships is you have a lot of fixed capital to invest. Growing that fixed capital takes time. It's about where do I raise the money? I have no idea in reality how long, what that scope of that investment looks like, and who needs to come in, what industry players and government players need to come in to make those type of relationships to form. But even when you look at small buyers and sellers in India, they are adapting to shocks. They know what's good for them and they are able to move quickly, but those are small scale. What we're discussing today, I think it's a much bigger scale. So that type of investment formation might take a much longer time period. That's my understanding. Yeah.
Thank you. Jeet, I'll be able to give you 2 minutes to answer that.
Oh, okay. Now, Canadian industry has gone through this multiple times. At one point or another, we had open borders, and we imported a lot of items from China, and then that relationship kind of didn't work out that well. And at that time, the Canadian industry, or at least in Saskatchewan, the farm industry, started thinking about diversity. But at that time, people didn't understand what is diversity. And you have to minimize the risk. It's not only risk based on an item. It's also based on a supplier. It's also based upon the country they belong to. It also bases upon the geopolitics, what's happening around you and what's happening in their country and other countries. So what I have seen these days, the companies are getting way smarter. They will always have a local supplier, and then they would have a supplier that is from China, supplier that's from India, and they would manage the risk accordingly, right? It's that's how they have been kind of managing the diversity in the suppliers. So that you would have suppliers from different countries, and they will manage the volumes to mitigate the risk and to still have the price competitiveness in that. The other item that we look at is customers as well. Now the firms are also diversifying where to sell. Clean seed, you can look, we went from just Canada. After COVID hit, we understood that Canada is not the only place where we should be selling. We need to go to the other countries. So we went to India, we went to Mexico, we went to Brazil. The capacity of risk versus the gain you get, I think that's where the change is happening now. The companies are willing to take more risk for greater gains because they're able to find the partners who are sitting on the other side of the pond, who has a similar feeling, right? So we have partners in India. They want to take a little bit of risk as long as they have some certainty. So the company from Canada goes there, and then it makes sense. Same thing with Mexico, same thing with Brazil. So I think overall, the industry is moving towards that. They want to diversify. And it actually, the benefit actually goes to the end users. So benefit goes to the farmers at the end, in our case, or anyone else who buys something from these companies. So it's critical to diversify, but it takes a lot of time. It's not 6 months, it's not 3 months. It takes years and years and years to kind of get to that level, to get to that stage where you're open to this idea of diversification without any stress or any other impacts on your bottom line, right? So it takes a lot of time. From my experience, anything from a year to 3 years.
Thank you very much, Jeet. With that, I'll want to thank all our speakers and hand it over now to Anupam, who has been patiently waiting, and he will do the closing remarks for us. Over to you, Anupam.
Well, thank you so much, Maha, and what a webinar it was. As a president of Alberta-India Chamber of Commerce, of course, I wanted to consolidate everything what we heard today. My role is just to make sure that I touch upon some next steps. And I think we clearly heard about today from most of the speakers is moving from just a transactional to an equity partnership here. How do we do that? And again, as a chamber, we invite such discussions from everyone who is attending the hour, maybe passing on to people who it may be of interest to. The unique part of today's webinar is we had stakeholders from it represents the entire ecosystem. People from the government from both sides, the academia, the chambers, the businesses. Of course, this is what makes a webinar a complete full meal deal for everyone. And that's what we see between the panelists and the attendees today. I have a twofold pride because I represent the country who's the largest producer and exporter of potash. And also I represent the country which is the largest consumer. And today, the relationship is more turning into a value-based, and the value synergies are so much felt that India and Canada can be perfect partners when it comes to product. Agricultural sector is already connecting the two countries. Within the agriculture now, products like potash can really do so much. What are we looking at? It's almost a $2 billion market today, where and growing at around 6 to 7% a year. So this is the market size we are working towards as countries, as we bring the commodities into the chamber, into the ecosystem. I wanted to personally thank His Excellency Masako Inansang to have joined us and also given us such a good topic to really bring in the webinar, as much as I wanted to thank all the distinguished panelists, speakers today, because this is the way we can build relationships and come together. Thank you to all. I also wanted to maybe talk a little bit about next steps. Is there a possibility of maybe seeing some delegations bringing this side or taking to that side to maybe strengthen this relationship, partnerships, and how can we really use such a wonderful product, potash, as a relationship builder and transactional, and also making sure that the Indian soil, which lacks adequate potash right now, how can I just continue making the CEPAs and the discussion between the two prime ministers very effective and also transactional. I think this is what I learned lots today. I wanted to, of course, thank my founding directors, Puneet, Vishal, and Dr. Vandana, for giving all the support in the background. Chamber has really, in a short time, been able to really connect on various sectors, and agriculture being one of the biggest and the strongest sectors. I'm so honored to be here as a panelist today. Thank you, Maha, for really engaging us. USISPF has really done a good job in a short time for showing, bringing the right topics for discussion, and I hope to continue doing these much many more, and trying to really bring some more effective communications and conversation within the chamber. Thank you, Ma.
Thank you, everybody. It's 9:01, so we'll close the webinar now. Thank you very much.